started to have discussions on whether or not to host this seminar this year. And we determined to go forward simply because if these areas are important in normal times, how much more important are they during this crisis that we face today? So I want to welcome you to the seminar, and I hope that the information you find today is helpful as you move forward with your company. So with that, I'm going to turn it over to Elizabeth to get our panel discussion started. Again, thank you for attending the session today.
Thank you, David. Good morning, everybody. I'm Elizabeth Woodward. I am a director in the consulting group at Dean Dorton, and I have been working with the Risk Seminar Committee since this seminar started years ago. We introduced a panel of executives last year, and it was met with great success. I can assure you that when we debriefed in November and planned our executive panel for this year, it was going to look very different than it actually looked, because when we got together in the summer, as David mentioned, it became obvious we needed to turn our focus and consider COVID-19. So that is what we're going to do. You're going to hear some discussion looking back and looking forward. I am an extrovert. I'd like to think that I'm an optimist, and I will share that I have struggled mightily during COVID to find things to be happy about. But in inviting the panelists, I will say that it was an example that COVID was a good thing, because these three panelists were the first three we wanted to invite, and they all three said yes. And I think you know that in a non-COVID environment, they probably, at least one or two of them, would have had a conflict. So I'm happy that you're here. I think we've assembled a dream team to move forward. And so I will just launch right in with introductions. On my far right, we have Elizabeth McCoy. Elizabeth is the CEO of Planters Bank. She serves on the UK Board of Trustees, and she serves on the Federal Reserve Bank of St. Louis Board of Directors. And so today, Elizabeth is going to be primarily focusing on banking, on her bank, and on the industry, and providing us input there and its important role in our recovery for this pandemic. In the middle, we have Leslie Flynn. Leslie is also in banking. She's with Central Bank in Lexington in the wealth management area, private banking. So her roles include wealth management, investment, and insurance advice. And so Leslie is welcome to comment in those areas, and you are certainly welcome to offer questions to her. However, we have invited her. She is the incoming chair of the YMCA of Central Kentucky. And so when we as a group met and talked about organizations critical to our recovery and certainly affected by COVID, the YMCA was obviously at the top of our list for its impact on not only people's mental and physical health with the gyms, but also their very significant role in taking care of our children. And so Leslie's going to share some thoughts on that with us. And then on my immediate right, we have Eric Frankel. Eric is the executive director of Bluegrass Airport, so that makes him responsible for the day-to-day management of our airport, which includes airport operations, finance, and administration. In the spirit of full disclosure, I will say that I have been on Eric's board for about 6 years. I've enjoyed it. I used to think Eric had one of the most interesting and best jobs in Lexington. I now wonder about that and just hope he doesn't call in with bad news or something. So as one of his board members in April, I will tell you that our employments in Lexington dropped 96%. So we, over the years, have spent a lot of time talking about how we would handle a financial downturn. We never discussed a 96% decline. And as Eric will share, Lexington's experience is consistent with what the industry has found. So with that, I would encourage you, I have come up with questions for the panelists, but I do encourage you to use the app and submit questions that you would like. So we will launch in, and I'm going to ask each of the panelists the same opening question. We're going to start with Elizabeth. Can you somewhat briefly describe how your organization or your industry has been impacted by COVID-19?
Thank you. Thank you, Dean Dorton, for inviting me, and I hope I can contribute to the conversation. Banking is considered an essential business, so we've been open the entire pandemic. We were first faced with the question of the remote working situation. We operate mostly in rural markets in Kentucky and Tennessee, so good Wi-Fi and broadband is an issue for us. So we determined early on that we would maintain our employees on premise. So we had to do our social distancing, and in most areas that was easy to do, but we had a few challenges along the way, of course. And then we have kept the lobbies closed. You may come by appointment, and that was an adaptable situation in the beginning. We had to train the customers what the situation was. And business customers in general, you'll notice, go to the same location for their business, whether it's every day or every week or every month, and go to the same teller. There's a reason for that, because we have to know our customer, and we would have to ask for ID if we didn't know you. So we had some challenges in the beginning as everybody had to convert to drive-through primarily, because when those tellers don't know those customers. So now that we've gone through all that process, everything's working fantastic. And I suspect our lobby traffic will decrease permanently as people are accustomed to drive-through once they learned how to use the pneumatic tube if they didn't know. It's been kind of funny. So that would be the primary, I would say, answer to the question initially.
It's funny, just to add on to what Elizabeth said, me being in banking, our lobbies are open. And it's kind of funny because if you think about it, everyone has to wear a mask. Mm-hmm. Well, you should not go in a bank with a mask on.
Right.
So how do you deal with that? And this will be something good for you for going forward. So we had to come up with a system. How does somebody go in there with a mask on? So we ask them to lower their mask right when they walk in the door so that they're seen on the camera, and then put it right back on. And then we have loose sight.
We're doing that too.
We have loose sight everywhere.
We do too.
And you all do that.
We do too.
So I just think it's funny.
Well, it's bank robbery training 101. You may not wear a hoodie, sunglasses, or a mask.
Right.
And now you're required to. So
Right,
it's a struggle for sure.
It is. It is. Interesting.
Yeah, thank you. Do you have anything else to say about the Y, Leslie, while we've turned over to you?
Yes, I do. You know, the YMCA is, gosh, it just has so many reaches. It's such a big part of the community, and a lot of people think of it as a gym and swim. So, you know, people that go work out there think gym, swim. So what happened in March with the COVID, we had to close. March, April, May. Well, what do you do when you close? You know, the people that come there are not probably going to want to pay. So we had to, I call it, reinvent ourselves. We had to be there for the community. So what was the most important thing, and Elizabeth and I were talking about this earlier about her Y in Hopkinsville, is we came to the table to provide childcare. And primarily in March, April, and I want to say May, before we reopened, we were able to provide childcare for the first responders, which would include the hospitals, UK, the clinic, the VA, Thompson Hood. You don't think about all these places, but Thompson Hood is in Wilmore, which is a nursing home, but they have a lot of employees. So our Caroline House, which is in Jessamine County, was able to provide daycare for those people. They did have to pay something, but some people were able to get financial assistance through the Y. And so I think sometimes you have to see who you are in a different way. And what happened with that was, you know, we had in the beginning to furlough a lot of employees. I mean, we had over 500 employees. Well, you don't need all those employees when no one is going to your facility. And our membership, this is kind of sad, I think, but the membership dropped 40% in just that short period of time. And, you know, programming was stopped. There's no sports. There's no revenue. Our revenue went down 30%. So, but one thing that we did offer was people could put their membership on kind of a hold, and they could also, during the first part of the COVID, since the gyms were not open, they could change their money that they were paying to go from membership revenue to a donation. And that was really helpful.
I was going to comment on that because as a member of the Y, I liked that. I got an email early in the pandemic saying you can just, you know, you can put your membership on hold or keep paying, and we'll send you a statement at the end of the year with the charitable
Right,
contribution.
which
I thought
was-
that was very smart.
It's, you know, and again, that's where you come together as a board or as a team and say, how can we make this work? So I think that was good for people that wanted to keep their membership. I know anybody I talked to, and I appreciate you keeping your membership. Anybody I would talk to, I was like, please keep your membership, because, you know, in order to provide these services for these healthcare workers, it costs money, you know, just in PPEs and cleaning and, you know, education. But, you know, I could just go on and on about all the things that we've done, and we'll kind of add that in later, some of the programs. But that was the primary beginning, was reinvent,
And
I guess is the word.
one more comment on the email you sent about the charitable donations. It came, you know, throughout this pandemic, there has been a certain sentiment, I think, a community sentiment of charity, of how, you know, if we're still getting a full paycheck, how can we help those that aren't? And I think the timing of that email from the Y focused on, you know, this is a way, just like going to restaurants and giving bigger tips than normal, this is a way we can help our community. Okay, so Eric, you want to just bring us all down now with your about aviation?
Well, first of all,
Did
thanks.
you reinvent an airplane?
Boy, well, we are going to go through a reinvention process. I'll say that. You know, clearly, to say this has been the challenge of our industry would be an understatement. I mean, obviously, last time this occurred, the aviation industry really didn't exist. No one is ever prepared for a complete, you know, stoppage. But I think it's also important for people to understand maybe the airport as an entity itself first. I think people probably don't fully realize how they enter, because we're this strange entity somewhat. We're a local unit of government, but we're not part of the city. We're not part of the state. And we're our own local unit of government, but we have to rely on our own revenues. So we don't receive any taxpayer dollars. We're our own, you know, we have to obviously operate like a business like anybody else. Obviously, this situation is somewhat different, and it really causes us, you know, challenges. We're an essential industry as well, but that had different implications, I think, for us. We can't modify our hours of operation. We're a 24/7, 365 operation. We really can't reduce our costs. We can't reduce our hours. We can't change in any significant way. Of course, we're also highly regulated, so obviously we have to meet the same safety and security requirement, whether we have 4,000 passengers a day or 100 passengers a day, which, if you recall, that's really what it was in the month of April. And so we really haven't had any ability to reduce our costs, but we've lost, obviously, revenue loss was 96% in the month of April. And the month of July, we were only down 67%.
It was a good month.
Yes, really good. I know it's going to reflect my annual evaluation. But I mean, this is really challenging for our industry, and not only my concern in the short term, and I've told this to our employees, I'm concerned for the long term. The more this industry is dismantled, we just can't turn the switch back on and bring the planes back and bring the flight crews back. And not only does it obviously affect the airport and the airline industry, it affects every other industry. That ability to travel freely, we've sort of taken for granted now in the modern age. But when you inhibit that, you inhibited every other thing. You inhibited conventions and hotels and restaurants and a lot of other things that I think will have a difficult time recovering as well. So
I think most of the people watching, if they have not tried to fly in the last couple of months, I think they're going to be surprised as the economy starts up again. Things that they started to take for granted are going to be gone. You know, like nonstop flights out of all three of the Kentucky airports, those have been increasing over the last several years. And once you lose a nonstop flight, it takes a long time to get one back. And that's going to be inconvenient for the travelers. I have a friend traveling next month who planned, she's a good friend, she was flying out of Lexington to give us the business. She lives here, but her, you know, the airlines kept changing the flights. And so she kept getting these emails that her layover in Atlanta, the time was decreasing and decreasing and decreasing. And that's something obviously you can't control, we can't control, but it does affect us when we fly. So you mentioned, Eric, you know, we don't get taxpayer money. The airport did receive significant money from the federal government in that act that was pushed through. So I think, can we go ahead and talk about that, about the impact of that money? Because I know as a fraud examiner by occupation, it's easy to look at the way that money was pushed out and be a little bit frustrated with some of the rules or lack thereof associated with it. You know, for example, the fact that below a certain income level, an annual income level, a person with the extra $600 a month was making more money than they would have when at working full time. That can be a little bit frustrating when you think about it, but the overriding fact was they got the money out very quickly, and that was important to our economy. So can you kind of comment on that a little bit?
Yeah, that's a great point. Clearly, you know, aviation is different, and I'm sure many people probably remember that the airlines got a pretty significant boost, mainly to keep people employed and keep the system operational. It didn't get much headlines to people that aren't in our industry, but airports did as well. And so our airport received about $10 million in a form of a grant that we could use for our day-to-day operations. I think Louisville was like 20 million, and Northern Kentucky was about 40 million. And for us, that basically bought us 4 to 6 months, give or take, from our annual budget perspective, which bought us some time. Of course, like the PPP and other types of grants, it did have restrictions in terms of what we could do with our workforce, which again, it kind of affected our ability to think kind of long-term. When I say long-term, I mean a year out, much less 2 or 3 or 4 years. So that grant for us those requirements for the airlines, they expire at the end of September, and that's very concerning for our industry because the airlines have already indicated that without further assistance, they're going to be laying off a lot of folks, which again is going to affect the customer experience, which again is going to affect people's willingness and interest in flying, and on down to the general economy. For us, we have a requirement to maintain our employee level through the end of the calendar year, which we will do. And we hope to be able to do that afterwards, honestly, but it's really difficult for us to make plans and figure out, we're like any other service industry. Our employees are our number one expense. We love them. They've been great about this. It's been very difficult to try to figure out how to work with our employees during this time. But it's one of those things that we can't ignore, particularly long-term going forward.
Elizabeth, can you comment on federal stimulus money and how it's impacted your organization?
So I will say that I feel like the stimulus money has propped up the entire economy. And there's a lot of research being done at the Fed level to understand the implications of the extra unemployment money, the stimulus checks that came out. One thing that's been very helpful to our industry is the regulators have been standing down a little bit. As we've tried to, and they've encouraged us to work with the customers, allow for payment deferments or interest only, which is total opposite of what we would normally expect to hear from them. So that's been very helpful. But just for perspective, for the industry, deposits are at an all-time high. Savings rates, household savings rates at an all-time high. Reduction in credit card outstanding liabilities, taking the biggest decrease since they kept records on it as a percentage. In our own bank, our overdraft fees are running about 40% below normal. And our check card revenue, which is the system gets a little bit of pennies off of every swipe that you make on your card, is at an all-time high. So sometimes we try to tune out the national media and go, what is the numbers really telling us? So we are to the point now, and we'll see. We thought yesterday there was going to be another stimulus bill. Today they say maybe not. So it's an election, less than 60 days. I feel like there will be another bill. So everybody wants to take credit for it. And it'll be great if there is one, to your point too, Eric, to help all kinds of. The hospitality industry is in a really bad way also. We have a fairly large concentration of hotel credit in our bank. So we would be welcoming they need some additional assistance beyond what was available through the PPP. But it looks like that the economy is good for 2020. So if we're going to see some credit cracks, it would be 2021, very earliest. But this is going to be a prolonged problem from the credit perspective of the bank.
I have wondered when you talked about increased savings levels, and I've noticed in my own family, we're spending less money. What I am not sure of is, are we intentionally spending less money because we're worried about next year, and so we're trying to squirrel it away? Or is there just less to spend money on, and so it's a consequence? And maybe it's a combination of
Not as much, you're not.
right shopping for clothes for events or anything.
Yeah, all that.
Traveling.
So there's that. I mean, retail's another hard-hit area. It's no secret to anybody.
Yes.
I've noticed too, I don't know if you have, Elizabeth, but people's credit rating has gone up significantly.
That's because
Their
people are paying
credit
their bills on
scores.
time.
I've noticed that in the last few months.
Has there been a change of not reporting
So there is,
delinquent payments?
there is some change
Yes,
on
some
that.
change on
We're encouraged not to report problems with interest-only credit or deferments, which would be a negative impact on your credit. But a lot of that's business credit. So, but the other thing that's really good, but while interest rates are so low, mortgage lending business is unbelievable. So if you haven't refied your mortgage, you should. You can get really, really low interest rate right now.
Just be very patient if you
But
decide
it's
to do
a
it.
painful process. It is,
It's taking a long time.
well, many of those people are working from home, and many people will, I guess, including here, might say that you're equally successful working from home. Our experience is mortgage underwriters and others are not as, it's taking a lot longer because people are working from home. Appraisals are a problem, delayed, people don't want you in your home, or the appraiser doesn't want to go in. So there's all these trickle-down problems that are popping up.
Oh, okay, thanks.
Yes.
The realtors are doing well.
Yes, they're busy.
Yeah, they are very busy. That's a good thing.
Leslie, let's turn a minute to board and board service. And so from a board member perspective, what has this experience been like for you?
Oh, gosh. I told Elizabeth, and this is just from the banking side too, I've never worked so hard in my life as I have in this year. And it seems like it's lasted forever, and it seems like it was yesterday that it started. And, you know, the board is the same. And I was at the Y yesterday, and I met with our acting CEO and our CFO. And I know Kelly is on the call today listening in, and another girl from the office. And she said, I seriously have never worked this hard in my entire life. And she's worked a lot of high pressure jobs, Lexmark, you know, different companies. So the board has really pulled together. It's funny, we were in the middle of a CEO search when this all started, and we just stopped. I mean, you can't bring in a new person to this kind of environment from another place that has no clue what's going on. So we have been so fortunate with our CEO, our acting CEO. Paula Anderson, she has been unbelievable. Al Isaac is the current chair. He and I both have sometimes daily contact with her. And, but amazingly enough, we have had a lot of people want to donate, not just through their membership, but, you know, capital donations. You know, we took over Frankfurt last year, I believe it was in 2019. And, of course, everybody knows what's going on in Frankfurt, down at where the Capitol building is in the Capitol Plaza. That's where the branch was. So that has to go away. Well, we've had people interested in helping us maybe rebuild that, and different places like that. So one thing I wanted to say about, we were talking about how the employee side of it, the workforce, and I thought this was interesting. Kelly and Paula said this yesterday. We've redeployed our workforce. So someone that maybe was teaching swim lessons is now helping with daycare, or someone who's doing something else is helping with the NTI, the internet schooling, because that's going on there. So it's kind of funny how you can redeploy how your people work and what they do. So it's been interesting. It's I think a lot of people are taking a hard look at what they do and how they do it. And, but the board has been great. We have an executive committee. We have our board. We still have our meetings, just like we're doing today on Zoom. We've all learned how to do Zoom. I wish I had some stock in Zoom. Who would have ever thought when you started working that we would be doing a meeting on a computer?
Elizabeth, is your bank board meeting virtually or?
We did a couple of virtuals in the beginning, but we're in person now.
Okay. Did you meet more frequently in the beginning?
No.
Okay. So what about with the Federal Reserve?
All Zoom. All their employees are remote. Still,
Were they
and
Zoom?
they expect to be through the rest of the year. Well, it's WebEx, more secure, the Fed's all buttoned up.
We use WebEx. Were the meetings in person though prior to COVID?
Yes.
Okay. So that's been a big shift.
Yes. Well, you know, it's fine and you get the information and you get the business done, but you miss the collaborative nature of what we do. And that's the culture piece is worrisome for the future, I think.
I think it is too. And I think right now we're all maintaining relationships that existed pre-COVID, but not building relationships, new relationships for the future. And so I hope this doesn't go on too long.
How do you want to be a freshman at UK right now?
Right.
Exactly. Meet anybody.
Yeah.
Well, thanks.
You know, it's affected so many people like you all were talking about. It trickles down. And you talk about college, and my daughter was in nursing school at the University of Mississippi. Well, how can she do her clinicals if you can't go in? You know, she said, I can't do my clinicals on a computer and learn how to do an IV. So they were able to get into a hospital to do them. But you don't think about all the different steps. How are these kids affected studying online? They have no social. And as far as the Y goes, a lot of people go to the Y for that community, especially the older community, the silver sneakers. Those are their people. You know, those are who they rely on to support them. If they maybe have lost one of their spouses, or they go just to play bridge or to play cards, or they might not be going to work out, but it's all about community and feeling that sense of belonging. This was my routine. This is what I did. I went to the gym in the morning, then I went to work, and then I went home. So how does that affect everybody's mental state?
Yes. The isolation clearly has negative impact.
And not only that, you couldn't in the beginning, and I'm sure you all had this too, you can't get together with your friends.
Right. That's exactly right.
My girlfriends and I, we had Zoom wine meetings, you know. So how do you do that and maintain your sense of community with anybody that you have?
My experience with those is the first one I did was great.
Yeah.
But after a few, it lost its,
Lost its
novelty.
fun.
And so in preparing for
Exactly.
today, I put together a timeline this past weekend of key dates during COVID. And so, you know, as you're putting together the dates, you're thinking what your own life was like. And I can remember in March, at the end of March, the first time I heard someone say that we might be home for 2 months. And I thought, well, that's crazy. We won't. There's no way we'll be home for 2 months. And now, you know, I wish that doesn't happen. Leslie, you mentioned healthcare, and I am interested to see how healthcare emerges from this. I've had a few experiences during the pandemic. One thing that's been interesting, and I wish if there's any doctors listening, it would be helpful if physicians would wear clear masks or face shields. I don't think people realized how much they read lips until everyone put on masks. And so sometimes it can be hard communicating with the doctor when you can't hear what they're saying. But I had a family member have surgery in July, and it's been one thing I noticed. I actually was very pleased with the healthcare we got from, you know, I was the only non-patient allowed in, and I felt like we got very good attention from the healthcare workers. And I really think it's because they weren't distracted with all the other people in the hospital, because they're so limited on who they let in. And so I've talked with some hospital personnel who kind of hope that sticks.
My mother,
some of it sticks,
my
not
mother
that
was
extreme.
in the hospital in the summer, and one of the guys told me that was there, one of the nurses, he said, we spend more time now with the patients because their families can't be here. And we feel like they need that attention. But then on the other side of it is, you know, my mother then had to go to a nursing home, and we couldn't go see her. And she passed away a couple of weeks ago, but when we got to go see her right before, but you know, we don't know how our
My mother's on lockdown right now too. And
yeah, and how are our families taken care of? And my in-laws are in assisted living, and you go meet with them, and you know what? They don't understand. My in-laws, they have no clue there's a virus. They don't know. Why can't you come in here? You know, it's hard. There's so many things that are hard we don't think about.
Switching to operations, Eric, can you share some, with Leslie kind of laid the table for us of how you need to switch operations sometimes. Can you share some difficult and potentially unpopular decisions that you've had to make?
I'm sure my employees can share those.
Would you get them on the phone?
Well, stepping back just a little bit, I did want to make one comment about boards, because I really feel like I have had an advantage in some cases in the sense of having a highly functioning board, that we trust each other, we understand each other's roles, we can communicate pretty effectively. Some of those things kind of go unnoticed until you get in a crisis about what that relationship is with the governing body and your chief executive and how that kind of works and functions. So that's been helpful. In respect to our employees, there's no question. It was hard, it still is hard for us, because while administrative employees we could send home, a lot of them they could work from home, and we figured out laptops, and of course we have a physical asset that has to be maintained and inspected and operated physically. So many of our employee groups, they have to be there. By the same token, we have to keep them safe. We have to keep them separated somewhat from one another. So if someone does get sick, it doesn't affect the others. And in our case, it's not just about our staff, it's about the airline staff, it's about transportation security staff at the checkpoint, air traffic controllers, how they have to operate, to try to keep something functioning 24 hours a day. It has been quite a challenge. And unfortunately, early on, this started in mid-March, and certainly when we all shut down in the month of April, we realized we couldn't keep going. We had maintained all of our employees for relatively a couple of months, not knowing, how long this was going to last. But in the end, we had did have to lay off some of our guest services, our frontline employees. We had to certainly change our benefit structure, and obviously we don't do raises. We're not doing merit raises this year. We've tried to pull back everything we could. Additionally, all of our projects, and this is where I think there's going to be another pain in the year or two coming, is we're one of 400 airports or so, and every airport's basically stopped all their projects that weren't already underway. So there's going to be a lag from a construction and an employment perspective that affects a year from
Other
now
industries.
as well. And again, there's going to be trickle down the next couple of years. So we've had to make some unpopular decisions, to be sure, but I think most of our employees are grateful to have a job, and I'm grateful that they're grateful, honestly. And we communicate with them every couple of weeks. We have a complete, anybody can ask any questions they want. And like any other employee group, I think people want to be informed. And even if it's a short, conversation, I think they just want to understand what's going on and know that somebody's looking out for them. So while we've made some difficult decisions, we're trying to do the right thing by our employees as well and keep them informed.
I just wanted to comment, what a good point about I'm thankful to have a job. I mean, I say that every day. I am so thankful to have a job and be somewhere where the people care about you and about your well-being. And I'm sure your bank's the same. Every day when I sign my computer on, it says, did you check your temperature? We make sure the mask, there's an update every single week. And the Y does the same thing. We make sure there's a big sign out in front of the North Y. I went yesterday. We require masks. I mean, it's a huge banner. And I think that's something that we have to be thankful for. And that's why we want to help these other people too. And that's why Elizabeth and I have worked tirelessly on these PPP loans that we were talking about, is even though it was the hardest thing I've probably ever had to do in my life in a 2-week time period, think about all the people that we helped. the dental offices, the medical offices, dentists had to shut down. You couldn't open. And, that's who I work with. And it's been crazy. And that trickles down to this other. And, the other thing, the childcare issue that we have at the Y, and Elizabeth and I were talking about this, think about how many people that affects childcare.
Right.
I think about now, oh my gosh, if I had young children now that were in school and they couldn't go to school and I would have to be home, how could I do that? How
It's
could
hard
I
when
manage
grandparents
that?
have them, and they now don't feel comfortable.
Exactly.
Around young people.
So it's, that's a big, huge area.
Eric, when we talk about an organization adapting successfully to this, I know one thing that gives me anxiety when I think about it for your business. You have so many employees who cannot fill in for one another, a firefighter. And to your point, you had to stay open 24 hours a day. The requirement, you're going to have to help me with this, within how many minutes you have to have firefighters? 3
minutes.
Within 3 minutes of a siren, has to have a fully trained squad there to put out a fire, 24 hours a day, 7 days a week. Limited number of people qualified to do that. If one team had to go on lockdown, there's just a lot of practical issues there that you had to deal with.
Yeah, and I think the law, so in the case of an airport, many airports, those firefighters also have a dual responsibility because they're also certified law enforcement officers. And obviously we know some of the challenges that are going on in our society now with law enforcement officers. So we also have that scenario where we feel like we're going to lose people over time, and it's really hard to maintain a workforce under these circumstances too. And we are trying to constantly evaluate our workforce, not only now and trying to keep them happy, keep them engaged, but then think about a year from now, 5 years from now, when we start losing some of these folks. You can recruit a firefighter or you can recruit a police officer, but recruiting one and training them to the other is hard to do. And there also are medical, certified medical as well. So it's really been a real challenge for us in not just one sector, but even the folks that inspect and maintain the runways. Again, we have to separate them, but they've got to be there. They have to be there 24/7, 365 if something happens out on that runway, if that needs to be maintained or lighting or so forth. And this has been a challenge for us. And this is not just our airport, but every airport really. And I think our business model is not going to be able to be the same going forward. We are going to have to figure out how to operate differently long term. Even when this recovers, which will take us, we think, in the 5 to 7 year range right now, we can't operate this way for the long, in the long term.
Well, in the law enforcement, my husband's a police officer. What a different area that is now. And when you mention that, if you want to have somebody that's going to be trained in law enforcement and fire, it's probably going to need to be someone fairly young. My husband's 62 and he still works the street. Is that crazy or what? He said that's the craziest thing. But, are young people going to want to do that with all the negative publicity on the police and the fire? Are they going to want to do that and get into that kind of career? That's something to think about too.
Eric, Elizabeth mentioned that banking has seen some relief from the regulators in terms of changing, maybe loosening some requirements. Have you seen that at all?
No, and that's been a little frustrating for us, only because, first of all, nobody in our industry wants to do something that's unsafe or not secure. We get it. But there are a fair amount of regulations that have nothing to do with safety and security that we were looking for some relief for, at least for a year till we figure things out a little bit. It is just, the aviation in general, for obvious reasons, is highly sensitive. So no one wants to be perceived as doing anything that might be perceived less safe, even though it has nothing to do with safety and security.
Right.
Yeah, that's been kind of frustrating. We still go through annual inspections with the FAA, and we still have certain requirements that we need to do in terms of exercises, which we don't think are a lot value added right now, but we still have to do them. So.
Elizabeth, do you feel Since I'm a CPA and you're CPA, we've got to talk about money. Do you feel that your organization is operating in a cost-effective manner, or what effect, if any, has this had?
Well, the largest expense of a bank is the cost of paying for deposits, and then second is our people, and everything else is really small. So we don't have a way to adjust our overhead very easily. So we're just trying to figure out, and you heard me say, some of our income's reduced for various reasons. But I also operate in Middle Tennessee, which is, would back up and say that's one of the more unpopular decisions is Tennessee's had a much less restrictive government mandates compared to Kentucky. So my HR people, so trying to figure out how to be fair and balanced on, let's just say you go to Florida, you come back to Kentucky, you're supposed to quarantine, you can come back to work in Tennessee the next day. So we've been having challenges on trying to figure out how to navigate through all that. So that's kind of a separate personnel issue. But otherwise, we've had a really good year. There's a lot of controversy over the PPP. Those loans are earned 1% only while they're on our books, but we did get fee for generating them. So for those banks that did a lot of them, that's going to be really helpful revenue for 2020.
Whenever we get it.
Yeah, we got ours already.
You did?
Yeah, we got all.
That's good.
Yeah.
Eric mentioned having to put some projects on hold. Has your bank been able to pull things
The
forward?
things that we were doing for our real estate purposes, all those resources were turned into plexiglass, hand sanitizer, all those expenses. We had, we've always had a lot of hand sanitizer because the money you're a teller, you're counting dirty money every day. But all the plexiglass, it took forever to get it, and they're in a position to charge plenty for it. So a lot of that kind of thing. A lot of those resources were used for that kind of situation.
Leslie, you've mentioned several times children and any new programs to help. I know that you've mentioned some about actually caring for children, new daycare centers, et cetera. What about mental health?
Well, I think not just mental health, but the education. If you think about the YMCA, we're there for the community. So one program that we have is called Power Scholars that we've had every summer for the past 3 to 4 years. And that really is aimed at children in the inner city to help close the achievement gap. And so how do we do that? So they were able to do it virtually. And they had 125 kids this summer, which we were up to educating over 400 to help close that achievement gap. And they're hoping to do several more, coming into 2021. Another thing that they're doing is like I mentioned earlier, the NTI, the schooling at home on the internet. If you think about it, a lot of kids don't have a parent at home that can kind of supervise them to do these school activities. So I was at the North Y yesterday. They have converted their gym, their basketball court, and they have cubicles for each child in there, and they have their computers. They have a staff person for every 10 kids. They help them get online. If they have a question, help keep them. Imagine a child that's maybe 8, 9 years old. I remember my son was that age. He's like this, and it's really about focus. Let's focus on what we're doing, because online learning is hard. You have to have a lot of discipline. So they have that also. But a lot of people, that costs money to go. And imagine if you're not making a lot of money, it's $175 a week to send your child. What if you have 2? What if you have 3 kids? It's an expense. But we do have financial assistance. That's what we have our annual campaign for. You have to pay something, but not a lot. So I think there's going to be a lot of good stories come out of this and how we've helped people. the kids, I think, I just can't even imagine if my kids were not in school and having to learn virtually now. It's just very difficult for parents and kids, one parent families. I feel for these people. I do. And I think it's going to cause a lot of learning loss.
Yes, yeah, I worry about that. Okay, so we have about 10 minutes left. I'd like to turn our attention to the future. When COVID-19 is in our rearview mirror, I'm not going to project when that's going to be. But when we're there, what changes do we see? I guess the first question is about telework. Do you think, I know, well, Elizabeth, you've said your employees have not been doing that. The Y has kind of redeployed. And Eric, some of your employees have had to telework. You need to keep people separated so that you keep people safe and that you can always have one team. Do you see the telework continuing after this?
I don't think so. Again, we just have a handful mainly of our accounting and finance folks that can do it now. But I think over time, you do lose something. You lose that connection. You certainly lose the ability to train and guide and coach, and, those type of things. And again, we do it on such a limited basis that I think right now we've told our employees that we expect that we'll do this for the rest of the calendar year. But I expect that when it's safe or when we believe it's safe, we'll bring people back.
Okay. So from a board perspective at the airport, what we have done, we technically are still meeting virtually. And we are going to do that until the end of the pandemic, because since we are a public board, the way we conduct our meetings is governed by law, by the state statute. And so we have to, meetings have to be publicly announced, et cetera. And so it's important that we have the ability to have a meeting if a vote is required. And, I was worried, what do we do if we have a board meeting and then Eric has to have a COVID test and is in quarantine and can't be there? So we are continuing to meet virtually with the option now to attend in person, and it's not in the boardroom, it's in a big public safety room where we can socially distance. And, we've taken a lot of steps to keep everybody safe. I think it has definitely taken a little more time for the airport staff to accommodate this, but what we find as board members is we really want that in the room contact. We want to be in the room with Eric, to talk to him, and with each other for that sense of community. And so we're kind of easing back in, but won't be able to go full in person, obviously, until the end of this. We did have a question, so I will interrupt my talk about the future to ask the question to each of you. If you can look back on the first steps that you did, and I can remember Eric's, when you realized it would not be business as usual for an extended amount of time. And I guess that acknowledgement that it was going to be extended, that my memory is that came with time. I mean, in March, as I mentioned, I don't think on March 13th, we thought we'd be here today, still in this. But so can you, Elizabeth, can you remember some of your first steps?
Oh, well, we thought we closed the lobbies on March 23rd, which was Monday. We thought we'll be closed 2 weeks, 3 weeks. So we have 170 employees across 7 counties and 2 states. And so one of the things we did was we said, well, we're going to provide lunch every Friday for everybody. It's a little morale booster. We're all closed in there together. Well, here I am 25 weeks in, still praying for lunch every Friday, which is turned into a great big financial commitment after 25 weeks. But
We just got to wear blue jeans.
well,
That was exciting.
we're on casual dress. So I don't know how I'm gonna put the genie back in the bottle on some of those things. So people like that. So we'll see. But otherwise, we just did the normal hand sanitizing and all those things.
Leslie, do you remember?
Oh, Lord. Yes, I do. We were doing the PPP loans and at the bank, and I'll just go on the bank for now because I wasn't living the Y experience, and I know it was just awful for them. It was a day-to-day operation. What do we do tomorrow? What do we do tomorrow? What do we do tomorrow? But at the bank, I kept telling everybody, because we worked literally 14 hours a day for 7 days a week. the ones that the loan officers. And I told him, I said, I think it's kind of like having a baby. It's really, really bad when you're going through it, and then it's okay after. Well, I'm not sure we've gotten to that after yet, you know. So, but like I said, you know, I think, especially at the Y, I think it was like Elizabeth said, well, this is going to be overseen, but it's not overseen, and it just keeps going and going. And how do we put one foot in front of the other? Just make sure we keep going. We have to keep going. If dates change, you know, it's funny. Right now we're in the budgeting process, and I'm sure everyone's in a budgeting process. You go, what do you write down? What's our revenue? What's our expense? We don't know. You know, we really don't know. Can we just break even? Would be like 2021. Can we break even? So from an accounting perspective, where do we go? Nobody has a crystal ball.
Eric loves budgeting.
Yeah, this is painful.
I'm sorry to bring that up.
Yeah, thank you very much. Our fiscal year begins July 1st, so we of course had to create our budget in March and April, you know, to get it approved in May and be ready to go. And of course, we literally, I mean, I almost asked whether, do we even have to do this? I mean, but what we did is we put our best guess, and then we put two other options. So we kind of had a game plan for a couple of different scenarios, but our system is such a complicated ecosystem. So when this first started happening, we lost the, you know, we didn't have international flights, but that trickles down to the rest of the industry. So, you know, what's really difficult about our industry is stopping it and starting it back up. So even in, of course, with the industry never completely stopped, which I was happy about because it's so difficult to restart, but it is really complicated. If you can imagine airlines going down to 10 or 20% of their normal schedule, but yet you still got to get people, particularly healthcare workers, you got to get moved around the country in different scenarios. It is really difficult to try to figure out how to get people, you know, shut the system down slowly when it's so connected both to international flights, you know, hubs, domestic flights, aircraft size, unions. I mean, it is really challenging to do. So we were glad not to shut down completely. I think, you know, maybe I should have made some decisions quicker in some ways, but I guess I've come to the conclusion now, September, I guess. I mean, I guess I've come to the conclusion that I'm not really going to make judgments for anybody in any leadership role because there is no guidebook. Everybody did the best they could. Yeah, we'll look back and think I probably should have done some things differently, but you know, at any level of leadership, I feel like as long as people's heart were in the right place, I'm not going to judge what decisions they made.
It was kind of like survival mode.
Oh, yeah, I mean,
it's like,
no
how
one
do we
knows.
survive?
Yeah, and I don't think we could have predicted. I mean, so at 9/11, the industry did shut down totally for how long?
3 days.
3 days, and then started to crank back up again.
Yeah, but even that took 30 to 60 days. I mean, you had airplanes and flight crews in the wrong places,
Right.
and you know, of course, international too. You can't just, you know, start it back up, and you have crew rest rules and all that other type of stuff. So we learned from that, which is why I'm glad we didn't shut the system completely down because of how difficult it is to spin it back up.
Right. Yeah, I just can't remember how many meetings I was in where we would be, you know, looking at our cash reserves and think, well, we're never going to shut down totally. I mean, that'll never happen again, you know, and so I'm eating my words there. Well, so any concluding comments from anybody? Anything that I haven't asked that you
Look out, 2021.
want to share? Are you optimistic, pessimistic? No comment?
I think we need another relief package, and that would put everybody's mind a little bit at ease. So we should encourage
We need
our
to get-
senators and our congressmen to
Yeah.
get together.
Let's get past November and see how we can.
Can we wait till November?
Probably not.
You know, my concern is, again, I
We need to
think
make some decisions.
the airline industry is just, you know, every industry suffering. So it's easy to say, well, it's just another industry suffering, but it has such a trickle-down impact on every other part of the economy. I think if we do not get another relief bill before September 30th, I think we'll pay a longer-term price ultimately.
Okay. Well, maybe that's a good note to end on. People have a 10-minute break. They can use it to maybe contact their senators.
Please do.
Congressmen. to get a
Please
relief.
call your senators and congressmen.
So-
I do it daily almost.
Thank you all three for being here. I've really enjoyed this. I think this has been good information, so I appreciate it.
I'm Jim Tenza, and I'm going to be leading this session. Bill Combs will also be stepping in for a few minutes. As I said, Bill and I will be leading this session. Bill and I are both directors in our assurance practice, and we both spend a significant amount of time working with risk advisory type services and internal audit services with a lot of different companies and a lot of different industries. Both Bill and I are going a bit stir crazy working from home. Bill has a coworker there with him. I don't have a coworker, but I use the time to grow a nice beard. But it's really nice to be coming to you here from our Lexington office and kind of getting out of our home offices. So today we're going to cover, in this first 45 minutes, we're going to cover areas for boards to monitor and help management with related to COVID-19. I'll cover that, and then Bill will go through remote environment and SEC response to COVID-19. And then I'll finish up with a few minutes about the payroll protection program and the forgiveness. So we work with quite a few boards, and I'm actually a board member with several different organizations. And one thing that's really been interesting and a lot of board members have struggled with is how involved they should be at the organization or the company in regards to the COVID-19 matters and issues facing the organization. And the quick answer is it depends. It depends a lot on how much assistance management really needs. It depends a lot about the industry that they're in and the size of the organization. But first and foremost, the board really needs to be supportive of management. And that means being available to answer questions, to help them as needed. A lot of organizations have gone to more frequent board meetings. So I'm part of a board where we met quarterly, and now we're meeting monthly. There's some boards that are meeting every other week to stay ahead of things. So if that's the case, being supportive means being available for those meetings and being engaged. As our panel talked about, initially when boards went to these Zoom meetings and virtual meetings like everyone's doing, I think everyone was really engaged. We're seeing now that as people become more comfortable with it, they're doing a lot of other work while they should be really focused on that board meeting. So it's important as board members to be engaged during those meetings and be available and really participate. Also, when we talk about being supportive, you really need to support the decisions that are being made by management. I'm on the board of a high school, and most schools have had a very difficult time determining if they should be online or in person or some hybrid. And parents and teachers are very passionate about those decisions. And while I may not have fully agreed with every decision that was made, it's important to support management. I had several parents asking me and questioning the decisions that were made. And it's important to really be 100% behind management. And that's a great way to really support management. Also, of course, you need to review and approve the strategic crisis action plan. Hopefully everyone's done that. But things are changing on a very regular basis. And so those action plans are always changing. So as a board, you should be making sure you're aware of what the different plans are and any changes in those plans. Also, it's very important to help management with risk management. I'm going to spend a few minutes on that. But essentially, helping management determine what are the most significant risks and make sure they're managing those appropriately.
the last three bullets on this slide really go to helping management with more long-term strategic stuff. As you probably got out of the panel discussion here, you can see these panel members very focused on the short term. What are they going to do over the next week, over the next 30 days, over the next 60 days? And as board members, it's really important to keep the long-term priorities at the top of everyone's mind and make sure you're really helping get the company or organization ready to come out of this phase and go into what some people are calling the reconstruction phase and trying to stay ahead of the next normal. You want to be on the leading edge. And so you want to be making sure you understand what are we doing when we come out of this? What processes are we going to change permanently? What's going to be best for long-term viability of the company, and really helping management deal with those and focus on those. So I've included a few quotes in here. I thought it was interesting to see what other companies, organizations had to say about board involvement. And this is a long quote, so I'm not going to read this one to you, but I do. This comes from McKinsey & Company, which is one of the top consulting firms in the world. And in here they're saying that it's a real balancing act for board members to provide support but also challenge management. I think typically the board plays a good role in challenging management, but when you have a crisis like this, you want to be more supportive than you are challenging. And the very last sentence on this I thought was interesting. This may well turn out to be the moment when your board proves its value or shows its flaws, and I think that's very true. This next quote, as an accounting firm, we're always looking and see what other accounting firms are doing. Deloitte, one of the big four accounting firms, says in a crisis like that of COVID-19, when the stakes are high and scrutiny is intense, the board has a unique role. Stepping in may be uncomfortable, but stepping aside is not an option. We also have a quote from the Office of the Chief Accountant for the SEC, and this really is just letting people know that they really think that the board and the audit committee really needs to stay engaged and focus on their responsibilities. And then the last quote we have up here, we do, as a firm, we do a lot of work in the education area. We work with Jefferson County Public Schools, Fayette County Public Schools. We work with other private schools, a lot of colleges and universities. And so the National Association of Independent Schools put this quote out there. And in here, it talks about having trust, respect, and clear communication to help. And also, you can see here the last part of this where they say that the school leaders and trustees must engage in strategic planning to ensure future sustainability. And that's, like I was saying, one of the key things the board can do is help management focus on the strategic plan and the long-term goals. So we'll spend the next few minutes talking about some of the evolving risk areas. And there are, I think, 10 items on this list. These aren't necessarily the most significant risks of every organization, but these are the risks that we see changing significantly over the last 4 to 6 months. And we thought it'd be good to talk about these and how they're changing. And again, the order they're in is of no consequence, so don't be concerned about that. We're not saying that this is the most significant risk, and not all these risks may be pertinent to your company or organization, but these are what we're seeing in most. So for example, business continuity. This has always been a significant risk for organizations, and this historically has been thought of as, when that one unusual event happens. There's some natural disaster, there's some system outage, or there's a loss of a key person within the organization, what is the plan and how are we going to deal with that? And obviously, no one foresaw something like this coming. And this is something now that boards and management need to be dealing with. It's what happens if there's several key people that leave? What happens? We're seeing a lot of organizations where the executive director or the CEO is out for a significant period of time because they contracted COVID-19, or maybe there's some taking early retirement. So having a good, solid plan in place is very important. One of the boards that I'm part of, we had kind of a general plan, and as soon as this came about, we said we need to have a more concrete plan in place. So we have built a plan on, what we communicate, how we communicate it, who does the communication, if the head guy is out for a period of time, who's going to do what. Typically, we're seeing that the board chair may need to step in and do some things. There may be other people in the organization that need to take on some different roles. And so having those plans in place are more important than ever. And if something is more permanent, how do you go about hiring a new person, or whether you get an interim person in place? So those are some of the things that you, as a board member, should be helping management assure that there's a good plan in place. Health and safety is probably the area with the most significant changes and risks. Some industries have always had a focus on health and safety, if you're a manufacturer or a coal company. But a lot of companies, this was really not a big risk at all. So, for example, as an accounting firm, we haven't been overly concerned about the health and safety of our employees because there's really no significant risk. But obviously things have changed. So we've had to do things differently. How do we keep our people safe? What protocols do we need to put in place? And it's not only our employees, but our clients that may visit. As we work with a lot of schools, how do we keep students safe? Healthcare companies, not only the safety and well-being of their patients, but their family members who may be visiting them in the hospital. What are all the things that you need to do, and how are you doing that? And as we start to come out of this, and companies are all operating, one of the challenges we have is the balance between safety and doing business. And this is something our governor, I think, has struggled with over the last several months. How much weight do we give to safety? How do we still operate and keep our people safe? And right now, that's what we're all dealing with, is we want to be operating, we want to be doing business, but we want to make sure we're doing things in a safe manner. And so what protocols do you put in place? When it comes to liquidity and finance, most companies got some PPP money, which was very helpful. And as our panel talked about, really, there's a lot of companies that need another injection of money, or they may need to get financing elsewhere. So obviously, the revenues of companies have decreased, and a lot of expenses have gone up to deal with PPP and other safety measures. And so you really, as a board member, should be working with management and understanding what does the projections look like, what's our cash flow projections look like. Management should be updating those on a regular basis. And the board really needs to make sure we're not only looking at the next 30, 60 days, but over the next year, and making sure that there's a good plan in place to have the finances available. Cybersecurity and data privacy. Jason Miller is going to be going over some of this in the next section, so we're not going to talk about that, but obviously there's been a lot evolving in that area. When it comes to fraud is always a risk that companies should be focused in on, and the board should have a good understanding of what the fraud risks are. And as we all have moved to more remote work, that has changed a lot of things. We've also seen a big downturn in the economy. And whenever there's a downturn in the economy, the risk of fraud increases. For those of you who work with risk management or internal audit, you are very aware of the fraud triangle. And so as people have a need for money, if they could rationalize things, then they may commit fraud, and it increases the risk. And that's whenever there's a downturn in the economy, that risk increases. And one thing that's always interesting, it seems like the fraudsters are always about 3 steps ahead of everyone. And I know as people move to remote environment, there's been new schemes that have come up. It's a little bit easier maybe to try to defraud someone by sending an email or a text message nowadays than it was a few months ago. Another area of risk, it relates to segregation of duties. Many organizations have changed their controls so that people can work from home, and people may have been given more authority and have access to stuff they didn't before, so that may cause some problems with segregation of duties. Also, with the reduction in workforce, there may be some duties that have been shifted around. So as a board member, you should be asking management about whether there are any segregation of duties issues and how they're addressing those. Then the last few here, I'll just touch on briefly. Changes in operations. Obviously, all companies, all organizations have changed a lot in their operations, including their supply chain. If you're dependent on 1 or 2 suppliers, obviously that risk is really great because you're not sure if those companies will continue to prosper and get you what you need. But I did want to, in strategic plan, the last one there, we already talked about a little bit, but on compliance with new regulations, I did want to touch on, obviously with the CARES Act and the PPP loan, we've all have lived that and continue to live that. And it's very challenging to make sure you're complying with those regulations when those regulations seem to be changing on a regular basis. But it's important that you follow those rules. And same thing as safety and health regulations. It seems like every day there's something changing. You know, what percentage of people can you let in your restaurant, or what are the things you need to do as far as masks and making sure you're being healthy. So those rules and regulations, as a board member, you need to make sure the company that you're working with is doing everything they're supposed to be doing and following those regulations. Okay, so with that, I'm going to hand it over to Bill to talk about remote environment.
All right. Good morning, everyone. So in the remote environment, technology is paramount. As Jim alluded to, we have Jason Miller to walk us through some of the remote issues that you all have been hopefully dealing with and mitigating that risk. So in my discussion, I'm going to talk what it's like to be an auditor, internal, external, in a remote environment, the changes in internal controls that we've seen. And then mental health. I think the panel did a good job touching on this earlier. Isolation is a real deal when you're in a remote environment. So how do you deal with that? What are some positive action steps? And then ultimately, what are the statistics telling us? There's been numerous studies on the challenges, but also the benefits. And I think that's an important takeaway from this discussion as you're on board and you're engaging management. Don't just focus on the challenges, the negative aspects of working remote, but what have we learned? And what are some positive aspects that we can carry forward into the future and help us retain and attract employees? Let's go right into one of my favorite topics, being an auditor. And so from a board or an audit committee perspective, you've got to engage both your internal and external auditors. And you should be asking them about the challenges of working remotely. A lot of us had already migrated to a remote aspect, but that was more out of choice, not forcing. So in this COVID remote environment, we've faced more challenges. And so areas that you should be in tune with are inventory observations. What are the auditors doing? Are they using technology? Are they having to observe things after the fact and roll that back? Is there bulk documentation? Hopefully, we've learned the importance of scanning and automation, but if there's still some things that the auditors need to touch in the office, how do you handle that? And are there ways, hopefully, to make it automated, but in the short term, how do you work around that? Interviewing, we've all had WebEx, Zoom, and use that feature, and that's fine, but it doesn't beat the face-to-face interaction, and I know the panel spoke to that, and the importance of building rapport. So how do you do that in a remote environment? And again, I don't have the answers for all these. I just want to really challenge you all to be engaging your teams to see how they're handling these challenges. And then documenting processes and controls. Again, we've got technology to help with that, but there's nothing beats observing people doing their job in person. So how do we handle that? And then Jim touched on fraud, and what really jumped out at me as I prepared for this, if the auditors aren't physically present, someone may be more apt to consider a fraud because you don't have that physical present deterrent in place. So keep that in mind. How are you making sure that everything is secure in this remote environment? Internal control, the big thing, and Jim touched on segregation of duties, you got to reevaluate. A lot of things have become automated. We've transitioned away from physical controls. Do we have any gaps that need to be remediated? And how are we documenting our controls in a virtual environment so that we can demonstrate adherence to integrity and ethical environment? And if we have to go through an audit, that there's a good audit trail. So that's internal controls. The next topic. Okay, mental health. This goes beyond debits and credits and accounting, but we've all been there as we've worked remotely, and isolation and mental health challenges are real, and you can't ignore those. And so from a board view, you've got to be engaging management. How are you handling this? How often are we checking in with our people? Are we making sure that they're interacting? And so there's some key things on this slide, but I want to go to the next slide that kind of hits home the key aspects. So we want to promote interactions, and there's been a lot of use of technology, like I said, Zoom, WebEx. There's been virtual happy hours on Fridays or Thursdays or what have you, where we get a chance to see each other. It's kind of in that Brady Bunch view. But those are important. And I remember just picking up the phone and calling staff as we were finishing audits, and just hearing the staff's voice and checking on them made me feel better. And as others checked in with me, that was very powerful. So that's very important. You want to promote activity, whether that's exercise, going for a walk. You cannot just sit in front of your computer all day, or that will create a lot of challenges. And then building in those structured breaks. So we can't assume that our employees are going to do this on their own. We need to talk to them. We need to ask them what they're doing. We need to provide some best practices. We need to survey them. We need to interact at a much higher level than pre-remote, where you had more physical interaction. The next slide. So statistics, I think we've all jumped into this flexible work week. Employees like it. I think employers are seeing benefits. So we're talking about a hybrid approach, get the best of both worlds, working from home, but also coming into the office. That seems to be the norm going forward. And then the movement from cities out to the suburbs or more open space. That's definitely true from a real estate and commercial space. Those trends are real. And businesses, including ours, we're being challenged on how we use our space to make the best use of it. All right, so the first two statistics, and this comes from a PwC study and a Gallup poll, but they're both very consistent. Clearly, employees would like 1 to 2 days to work from home. But when we come into the office, why are we coming in? And the panel touched on this as well. It's to engage, it's to collaborate, it's to see each other. And so that's still extremely important to the success of businesses going forward. But a third of employees surveyed said, I just don't even want to go back to the office. And that may work fine for certain businesses, but you've got to examine the job descriptions and figure out, can we make this work for the employees and make it, win-win? And then continuing, so space. This is interesting because this brought to light something, because I thought this first number would be higher. Less space because of being able to work from home. In fact, as an example, Pinterest, a public company out in San Francisco, they recently entered into a new lease, and then they re-examined during COVID their needs and decided we don't need that space. So in the third quarter, they've announced about a $90 million charge that they're going to take to get out of this lease. So that's pretty pricey. Hopefully no one on this call has to go down that path, but it is important to reevaluate your space needs, and as leases come up, you decide if we need that or if we need to repurpose the space, which gets into the next point. So 50% of the executives said, hey, we need more space because we believe social distancing is not a near-term phenomenon. This is a long-term aspect. We need to accommodate. So both from a growth and social distancing, we need more space. So again, that kind of goes counter to the remote aspect, but I thought that was an interesting statistic. Needless to say, there's going to be changes, and working from home, for the most part, is here to stay. So from a board perspective, just engaging management to figure out how are we making that work for employees? Because if we don't make it work, guess what? They're going to go down the street to our competitor or to another business, and we could lose valuable employees because we weren't willing to be flexible. Next slide. Okay, the challenges. We've all been challenged by working remotely, and productivity is at the forefront. And I think initially, productivity was fine, but the longer this has gone, we start seeing some metrics that aren't positive. And so how do we balance things? How do we recalibrate expectations if we're going to have people working remotely? That's really important. As I mentioned earlier, the phenomenon of always being on the clock. How do we set some guidelines so that there's space so people can still have their life and then also be responsible to the business? Collaboration, that's why people want to come to the office. And we do have collaboration tools out there, and I think they're working fine, but how can we collaborate from a remote? And then as you bring employees into the business, that culture aspect that we talked about, how do you bring that, how do you bake that in a remote aspect? And then how do you evaluate performance? If you're a manager, you're used to walking around seeing employees perform. So how can you fairly evaluate people if you're having to rely on remote aspects? The paper files, hopefully this has been the impetus to get away from paper files, but if they're still there, how do we provide access? And I know employees have struggled with technology from home, including not having printers or other aspects. I know I came into the office to print large files because I wasn't able to do that from home. So how do we give employees resources, maybe a stipend or something to that effect, so that they can have their home office be as effective as working from the office? And then cultivating those customer and client relationships and developing those. How do you handle that? So these are all been challenges. And then this group out of San Francisco, I believe, did a study. I'm not going to read off. You can take these with you, but I think these are all real issues, and clearly technology is at the top of the list. It's easy to pick on technology because the only way you can work remotely is through technology. So there's a lot of challenges there, but it even goes to being contacted outside of work hours. So it runs the gamut. Those are all real issues that you should put in front of your management team and see how they are handling these. So what are the primary focus? The flexibility is there. I think that's a positive. We need to embrace that. Do we have the right equipment? establishing boundaries, guidelines, and then managing, workloads. Those are real items that need to be handled. And then PwC has a good 5-step action plan that I would advocate everyone take back to their company. As I mentioned, taking stock of your real estate and your lease needs. Developing a mobility plan, you've got to be intentional. This has to be down on paper that you can communicate to your team on setting expectations depending on work. Some people may be able to go 100% remote, where others have to do a hybrid, where others need to be in the office. So you've got to adjust it to the job description. Asking your people, this is one of the big takeaways from this discussion. And fortunately at Dean Dorton, we've done surveys. We've asked our people what's worked well, what hasn't, so that we can be proactive. But doing surveys, interacting with your employees to reflect on the past several months, what's gone well, what hasn't, and then creating some action steps, that'll go a long way to keeping those employees engaged. The technologies, again, Jason will do a good job talking about the collaboration and the challenges of working remotely, including security. And then defining the new ways. This gets in, a couple points I want to raise here is the performance metrics. You've got to be flexible. You can't just continue with your old metrics. Do those still fit if you're having people work remotely? You may need to create some new metrics to assess productivity. And then coaching employees, as I mentioned earlier, that's a real challenge. And so I think it's really incumbent on HR and the senior leaders of the company to get together and talk about trainings and best practices of how we can coach and encourage employees in a remote environment. So again, those are all good. And then as a bonus, just quickly, I'm not a tax professional, so I will put the caveat, please check with your tax advisor. But states and local municipalities have gotten very excited about remote working and whether or not they're getting their fair share of taxes. Louisville Metro has a policy that they're basically going to say, your business is in Louisville, we're going to tax you as such, even if you're working in another county or another state, but there is a way to get a refund. Ohio has seen a lot of issues where Cleveland's been very aggressive in collecting their taxes, even if people are working remote outside of Cleveland's jurisdiction. So those are challenges, and this is real, and so we don't want anyone to be surprised as your taxes are being calculated this year, quarterly, annually. So check with your tax advisor to make sure that you're properly calculating those state and local taxes. Just quickly from a SEC perspective, I think we can learn a lot from public companies because they're very transparent. So the SEC has provided a lot of good guidance. These are areas, and Jim touched on a lot of these, and so even as a private or even a nonprofit, I think these are all items that should be discussed with management and at the board level. And then continuing, what have, from action step standpoint, what have the SEC companies have been doing? They've been preserving liquidity for sure, and all the way down to, unfortunately, having to take a lot more asset impairments. And in the slides, there's a couple examples that highlight these points. So Union Carbide, they were focusing on maintaining cash. They had to reduce capital expenditures, and they idled some operations. And then continuing on the airline front, and I know we had Eric from the airport board earlier. So American Airlines, clearly the airlines have been hit hard, so retiring aircraft, looking at cost savings to preserve liquidity, and then doing expanded asset impairment assessments, and then actually taking charges. Those are real things happening. And then the Office of Chief Accountant, these are their top consultation points. And number one relates to financial statement ramifications of the CARES Act, including the Payroll Protection Program loan, which Jim will discuss at this point.
All right, so I just have a few minutes here before we get into the IT stuff. For the PPP loans, just one quick item here on the accounting for the forgiveness. Hopefully we'll be in the stage here soon. And I just wanted to make sure everyone is aware, Obviously, when you receive this money, most people accounted for this as debt. So debit cash, credit the debt. And then when it gets forgiven, you will have a gain on the forgiveness of debt. So you record the debt. Whenever you receive the money, you'll record the gain on the forgiveness whenever the SBA officially approves that. So a lot of organizations, a lot of companies, those may be 2 different periods. A lot of nonprofits have a June 30 year end. And so for most all those organizations, you'll have the debt recorded in your June 30 financial statements, and the gain on the forgiveness will happen in the next fiscal year. So just want to make sure I was aware of that. There's a lot of questions about the timing of that and when do you record it. There is an alternative accounting treatment where you can treat this more as a grant than debt. So if you choose that route, which could be acceptable, essentially what you do for a grant is when you receive the money, it's considered deferred income because you have to use that money for a specific purpose. And then as you use that money for that specific purpose, you would have those expenses, but then you would also release that deferred income and record the income at that time when you spend the money. So for some organizations, if you take that route, you could get, so for a June 30 company, for example, it's very possible that you would record all that income in the period ended June 30, 2020. I will say that there's, if you do treat it as a grant, if it's over a certain dollar amount, you may need to have some special audit procedures done. And there's some other things with that. For example, you need to prove that it's remote, that that loan will not be forgiven. So there's some hurdles to overcome, but there is that option. So really wanted to talk briefly about the timing of things. So the SBA right now is accepting forgiveness applications. I think they started a couple weeks ago, and but most banks are not ready yet. So the first thing is the banks really need to accept those applications, and you need to work closely with your bank on this. All the banks are going to do it a little bit differently. There are some standard forms, but as far as what documentation is needed, each bank may have a little bit different idea on that. And they also want to make sure everything is set up appropriately before they accept the applications, and because they have to go through a review process before they submit it to the SBA. And we would encourage you to also include your CPA or accounting firm to help review those forms or help with submitting that to the banks. So here are the forms that need to be completed. There's a loan forgiveness calculation form, Schedule A worksheet, and then there's certain documentation requirements. And then there's demographic information, which is optional. So items 1 and 2 have to be submitted, and then the worksheet and documentation requirements, again, that may vary from bank to bank as far as what and how much information. But if you need to have this documentation, otherwise you won't get forgiveness. That other documentation besides the forms, you will have to submit to the bank, some information on the payroll costs as well as the non-payroll costs. And again, what exactly you provide the bank will really dictate that. But basically, that'll be support for those costs, and then as well as your FTE support, which may be payroll tax filings or other filings. So whatever information that you submit, you have to keep that information for 6 years. So here's the information that you need to keep. It's support for calculating the employee salary wage reductions and documentation related. You have changes there, job offers, refusals, terminations, all of that to clearly support the number of employees and whether you had any reduction or not, and also the safe harbor calculation. So all of that information you have to keep for up to 6 years. And so your bank or lender, they have, once you submit the application, they'll have 60 days, up to 60 days to go through that. And then they'll submit it to the SBA. And then the SBA has up to 90 days to review that and remit the forgiveness amount to the lender. So it's when the SBA, once they remit that amount, you'll get notification, and then that's when you would record the income on forgiveness. I do want to point out, so that the bank, when they review things, what they do is they're just making sure that documentation is there. They'll redo some of the calculations, but they're not auditing everything. They're not going to be, verifying all the supporting documents. They're not doing an audit of it. They're really just making sure the calculation is done properly and all of the information is there. Then I said they either approve it or deny it, then they submit it to the SBA. I do want to point out, so the SBA, that will go through some initial review and within 90 days, but they can review for any period of time, and we're assuming it's 6 years, since that's when they said that you want to keep the documentation. So they can come in and do a more detailed review at a later date, and that's why you need to maintain that documentation. And they can do it for any size loan. They did initially say that if you got over $2 million, that you would be going through an audit. But if you get less than $2 million, that doesn't mean that you won't. And I don't know if that's really a hard, fast rule, that $2 million. So just like any type of tax return or things like that, you can be audited. And so you need to make sure that you keep all of that information, but they will be doing really an audit to make sure the loan was calculated properly, they were used for the proper purpose, and they'll do a real audit of that information if you're selected for an audit. I thought I figured out the clicker. And we've included some sources here that you may want to check out to help with this. And as always, I think you can reach out to us or any accounting firm to get some guidance. Okay, so with that, I'd just like to thank you, and hopefully you guys got something out of this. And I'm going to turn it over to Jason Miller to cover cybersecurity and technology.
All right, now on to some fun stuff. So my name's Jason Miller. I am the Director of Business and Technology Consulting at Dean Dorton. As I was preparing for this, it's a little bit challenging in the world we live in today to give a presentation. Even though I've done a number of them virtually, it's still hard to get used to not having an audience to talk to. And I remember earlier in my career that, you always got nervous about presenting in front of a big audience, and now I long for the day to be back in front of that audience. So bear with us as we go through this process. So during the presentation, please feel free to submit questions via the chat, and then also we'll have the polling components coming up as well. We want to give a little bit of a cybersecurity update today, and so we'll start off with a general cyber update and talk about things like we would pre-pandemic. But then we'll kind of cover the curveballs that the pandemic has thrown into the way we work with technology, and some new concerns and what you should be thinking about with regard to cybersecurity during a pandemic. Another slightly different component that we'll also cover today is a breakdown between small and medium businesses and large businesses, and some correlations that we can draw between those and differences in what you're facing with security challenges. So we'll start off with just our general cyber update, and this was information that we would have available if we weren't in the middle of a pandemic. And so if you've heard us talk before, one of our industry standards that we use is the Verizon Data Breach and Incident Report. And that is a report that's been out consistently since about 2010 and has a lot of valuable information that we learn about the evolving and changing risks that we see in cybersecurity. Another resource that we use a lot is the Ponemon poll, and this specific one is geared towards small and medium businesses. And this publication is an international publication, so it gives us a cross-section of what's going on in cyber across the world for small businesses. One of the key components that's important to understand when you talk about cybersecurity, you'll hear references to incidents and breaches. And it's important to understand what we mean when you hear those. And so an incident is a security event that compromises the integrity or confidentiality, availability of a particular information asset. But a breach takes it one step further and tells us that data has actually been compromised and really puts us into a more exposed position. And many of our regulatory requirements and laws require additional steps if data has been breached. And so as we go through this topic, we'll talk about concerns and situations that are driven by both of those. So as we start to look at the information that we get from the latest Verizon report, so they produce this report each year. The report consists of information that Verizon's cybersecurity professionals have gathered as they've done incident response with their clients. They also receive information from governmental agencies, and they pull all that into some information for us. So the data we'll look at for the 2020 report was actually findings or issues that happened in 19. Obviously, there's a delay in getting that information and getting it compiled. But as I looked at the stats for incidents and breaches between 2019 and 2020, you'll notice that the number of incidents went down, but the number of breaches went up. So our ratio of data being impacted by a particular incident is almost 3 times as much year over year. So there's a couple of things to keep in mind as we talk about this data. It will shift and evolve over time because our risks and our threats shift and evolve, but it also shifts based on information that's reported. So, there's a lot of businesses who will experience incidents or breaches that may not report them. And so the information that they get is going to ebb and flow over the years, but it is consistent with some other information that we see. So I have a couple of thoughts on why you see the difference in the ratio and why you see potentially a drop in some of the incident numbers. And the first is that the risks and types of things that we're dealing with continue to evolve. And so historically, if you think about a ransomware attack, historically, it was the encryption of your key information. And a lot of people would look at that and determine that the data wasn't really compromised or breached or taken for nefarious acts. It was just locked in hopes of getting you to pay a ransom. Our recent evolution of ransomware has changed significantly, and we'll reference this a couple of times throughout the day. But the current ones that we've investigated, you're having the cyber threat actors actually take a copy of the data first and move it offsite to their control, then encrypt the data on your location. And so that has changed in our ratio. Historically, a lot of people would classify that as an incident. Now, unless you can prove beyond a shadow of a doubt that that data was not copied before it was encrypted, you're seeing ransomware classified as a breach. So that's one reason. And then the other reason I believe we're seeing some shift in these numbers are more and more people are covered by cyber insurance. And what that means is that when you have an incident or a breach, you're contacting the insurance company. They're assigning cyber professionals from an IT perspective to investigate and remediate. And they're also assigning cyber savvy legal counsel. And when that gets in play, then they're a little more sensitive to the reporting requirements and the classification of a breach. Whereas I think a lot of companies independently would try to rationalize their way to an incident versus naming it a breach, because then you have to disclose and do a lot of additional reporting. So this year, this was a little bit new in the Verizon report, and they started to give us a little bit of a breakdown between small and medium businesses and large businesses. And their classification of that is small and medium are less than 100 employees, and large are greater than 1,000 employees. And so a couple of key things that we notice. First of all, the number of incidents and breaches reported are lower than the total, because a lot of the data reported doesn't provide us this information. So it's a smaller set of incidents and breaches that we're looking at that tell us the classification of the business. So keep that in mind. A really interesting one is the ratio, though. So in our large businesses, only about 6.6% of the incidents resulted in a breach. But in our small and medium businesses, almost 50% of the incidents were also classified as a breach. And so there's a number of things that could play into that, but I think it's the type of incidents that we see at small businesses that drive that, and it creates a lot of vulnerability for our small businesses. Another couple of key things, and these aren't where they're different, but it shows some similarities, and it's who is perpetrating these cyber threats. And the top threat actor in both categories is external by about 3/4. So it's coming from the outside, so that's a consistency. What are their motives? So our largest driving motive is financial in both groups, around 80%. And then what is compromised or how is it compromised? And that's through user credentials, and that's pretty consistent between the two. So one of the things we really like about the Verizon report is because they do it consistently year over year, they compile a lot of information and they analyze it to view trends. And so this graph, don't get too caught up in it. It looks like a big bowl of spaghetti or a Rector set gone wild. But what it's telling us is over time, what's happening. And again, you're going to have some fluctuation based on the data reported in a year. But we have some key trends and commonalities that are interesting to point out. The first is that social engineering and phishing schemes has remained in the top 3 for the past 6 years. And so that tells us that our users continue to be our most vulnerable target points for cyber criminals. The second one is hacking and stolen credentials has continued to remain very high over the last 5 years. Again, our users are being targeted. And then the third is that all of our malware categories have dropped. And what that's telling us is that we're getting better at defending against those kind of vulnerabilities. And so our advanced next generation antivirus solutions are getting better at protecting us. Now, let's don't rest on those laurels, because the bad guys are always trying to figure out a way to get around that. But it does tell us that we are getting better at defending that stuff. We now need to shift our attention to how to better equip and prepare our users and protect in those areas so that we can see those trends come down in the coming years. So the interesting graph that I like to look at is top hacking actions. And so when you think about hacking, most people think about, the movies and the TV shows, and you see the guy, with 5 monitor screens hacking away at things, beating on a keyboard, running scripts and doing stuff. And you think, wow, this is pretty impressive. But the reality is most hacking isn't that sophisticated. Most hacking is through social engineering and phishing and tricking our users into giving them their user IDs and passwords. And so we can easily do that with a lot of low-level and unsophisticated tactics. And then we can start the process to get into companies' networks and systems and create a lot of issues. So with that, we see that brute force use of stolen credentials, and that's really just writing a small script that will go out and try common user IDs and common passwords and see how easy it is to get into somebody's system. And unfortunately, in most organizations, the proper controls are not there to be able to limit that or keep users from using easy to guess and common passwords. And we'll cover that in a little more detail later on. So what are our top motives in incidents? So we talked about this a little bit when we compared the small and large businesses, and our top motive is financial. And it will continue to be as long as there's money to be made and rewards to be had. People are going to continue with the cyber threats. And the second one is called secondary. And secondary really is most incidents or breaches require maybe a two-step process to execute the full attack. And so you'll have an initial incident or breach of information that leads to the second one, which may be the financial motive. So you'll see secondary up there as a way to kind of get in the door and get a foothold. You'll also notice a significant increase between 2018 and 2019 in the financial motive category. Some other just interesting facts that I pulled out of the Verizon report as we reviewed it. The first is cloud assets. And so we understand that more and more services and solutions that we subscribe to or we use are moving to the cloud. But interestingly, as it stands today, only 24% of our cyber assets were compromised. Over around 70% were still the on-premise solutions that we use, our on-site servers and systems. And one of the things I think you see in that is, typically speaking, a cloud service or a reputable cloud service will have a stronger information security program in place than a lot of us do internally. And so they're putting more resources to protecting, but over time, they're still targeted and they still do have issues. And you want to be sure that as you're working with these vendors, that you have a good vendor management policy in place to ensure they are doing the things they should be doing or say they're doing. Another interesting item that was really a pleasant find was the identification times seem to be dropping. And so in historic presentations, we typically would have a graph that would show the amount of time it took most businesses to identify they even had an issue. And that was often weeks and months was the highest amount. That number seems to be dropping to days. So that's a positive that we are becoming a little more aware of issues going on, but there's still a lot of work to be done there. As I mentioned earlier, the fact that our malware events seem to be dropping as a primary driver is positive, in that our next generation antivirus and anti-malware solutions continue to improve. And then personal data disclosure continues to increase. So we talked about the ratio of breaches increasing. That means that either some PII or PHI, personal health records, are being compromised more frequently. So we're going to shift a little bit from our Verizon data to our Ponemon report. And this talks a little bit about the small business cyber attacks. And with that, we see attacks and breaches compared over a 3-year period. And we'll see that of the companies polled, a significant amount of them had an attack, or what Verizon would refer to as an incident. And then with them, a higher ratio that actually resulted in a breach. So it's consistent that small businesses have a higher breach ratio typically than our large businesses do. So why aren't small and medium-sized businesses better at cybersecurity? So they polled the respondents, and this may be a little bit hard to see, but the finding really was not surprising. We hear this on a regular basis, but it's a lack of resources. People referenced a lack of professional resources or a lack of staff able to dedicate to this situation. and then also a lack of money or budget funds for it. And that's all been consistent over their 3 years of data that they've got in this report. And really, it's unfortunate because as we've dealt with companies who have experienced a significant cyber incident, the cost of that is so much greater than the cost of being proactive up front. So if you get nothing else from the presentation today, it is, spending the time or spending the dollars today will have a significant long-term savings for you versus the alternative of having a breach. So what are the costs of a breach? And there's lots of data out there, and sometimes it can be conflicting, but I felt like the numbers in this report were fairly consistent with some other ones. And there are really two types of costs that we see when we have a cyber incident. So you have the immediate costs. You have to hire a professional to come in and help contain, eradicate, and remediate. You have to hire attorneys to help you through regulatory response. You may have to pay for monitoring for your constituents that may have been compromised, public relations type costs, and business reputation costs. The other costs are disruption to the business. And we'll talk about some recent examples of situations that we've helped clients through over the past year or so. And, it can be very disruptive to the business. So, you lost business opportunity, lost reputation. So there's two components of that cost that we want to look at. And if you see that most of this is over $1 million in each one of these buckets. And so you think about the cost of being proactive and trying to prevent a cyber incident is very small in comparison. So we're going to shift gears for just a little bit, and we're going to talk about what we've dealt with in 2020. And I would venture to say that most of us can't wait for 2020 to be over. But I would also say most of us won't soon forget 2020 as much as we would like to. So, if running a business and dealing with cyber threats wasn't hard enough, let's layer in a global pandemic. And so let's rewind a little bit to March of 2020 and think about what happened, because as we heard from the panelists earlier and from Jim and Bill, we all went through a great deal of change in a very short amount of time. And in that, not only was it going through a lot of change in a short amount of time, we often did it with a lot of changing guidance and expectations right in the middle of what we were trying to do. So I know as an organization, Dean Dorton would put together a plan, and before we could get that plan communicated to the team members, we were getting new guidance from the governor or from the federal government on new restrictions or new concerns that we need to be worried about. And so we would stop and shift and change, and we'd communicate one thing one day and it would change the next. So we were all kind of in a chaotic type of environment. So what happened was, we all said, well, we need to get a remote workforce going. A lot of organizations were not prepared for this. This was not in most people's business continuity playbook. We do a lot of work in that area, and we try to come up with scenarios of things we need to plan for. And unfortunately, a global pandemic was not necessarily one of those most businesses think about. I'm sure there are some remote industries where that was in their playbook, but the vast majority of us did not have that. And so it's one now that we all have to think about. But we had a rush to remote access. And so it was do anything you can as fast as you can. And so did we cut corners as we opened up the ability for our employees to access our resources remotely? Did people turn on remote desktop services without the proper protection? Did we throw out more VPN users than we had been prepared for? Did we start using third-party tools and oftentimes free tools? And, I usually tell people, free's good, but you get what you pay for, and it may get the job done, but have they gone the next step to take the security protocol that they need? Did most of your employees have laptops or the proper devices to work remote? Or did you just grab any spare laptop, probably the stash in the storeroom that had been decommissioned because it wasn't compatible or was Windows 7 and couldn't be secured? Were you using more home employees or employees' home computers that probably have very little security protocol? Who are we dealing with? Did we have a bunch of untrained remote workers? We have a remote workforce at Dean Dorton, and they're used to this, and they understand the risks and the concerns, and they have the proper setups. But that's a small number of our workforce, and so we just shifted a number of people who work in the office almost every day to working at home, where they used to that. They're out of their element. They're out of their comfort zone. And then what communication were we using? Did you have a Zoom or WebEx or whatever flavor of video conferencing account before that day? Were people using personal emails? Were people using personal file shares? So what concerns does this create? Obviously, we've introduced new vulnerabilities for criminals to access our network. We've got a lot more vulnerable and unpatched devices processing critical data. We got a lot of unprepared users. And then we've got communication going on, and do you really know where your information is? Do you know all the places that employees are moving and storing information just to get their job done? Have we started to put our sensitive client information in insecure locations? So we're in the middle of this. As Elizabeth mentioned in the panel discussion earlier, we all thought this would be over by now, but we're still living in it. We have a few more people back in the office, but we still have a high number of people out of the office. And so what are the things you should be doing now that you've settled into this unfortunate reality, and what can you begin to do? So next we got one polling question. I thought, was there another polling question there?
Did you go too fast?
There it is. Oh, all right, they're out of order. So I'll cover this one first. So remote access, have you locked off any insecure protocols? Have we secured remote access with multi-factor authentication? We'll cover multi-factor authentication in a little more detail in a moment. Have we started to update those devices? So if you did roll out a bunch of laptops that maybe weren't patched or secured, have we gotten those replaced? That may still be a bit of a challenge. We're seeing delays with the hardware manufacturers on getting devices, especially laptops. You're fighting school systems, trying to get laptops for students, and every other business trying to get updated. But have you started to work through that process? Can you improve your password policy? And so we talked about this a little bit earlier, that improving your password policy is really important. We forever had the opportunity to do complexity and security, and the age old, you have to change it every 90 days. That's been relaxed a bit. We're at a point now where we don't recommend changing as frequently, but more complexity and layering in additional tools, third-party softwares that enforce that complexity. What we found was users having to change every 90 days would come up with common passwords, like the season, summer 2020, and they would change that with each season, and those became common ones. And so those brute force attacks knew that they could go through common usernames paired with these common passwords and find their way in a lot. So there are some solutions that can help you get past those vulnerabilities. And then I would encourage you to have an external vulnerability scan. So have a professional scan your network or your key systems just to see if they're vulnerable or anything was changed that you didn't anticipate that created a new threat or vulnerability. Another quick topic here that has gotten a lot of attention during this current time we're in is around online meeting tools. And so some organizations had already adopted a solution and used them regularly, but a number of people had not, and even organizations that had it had a high number of people who within the organization may not have had a need to use it. And all of a sudden you've got a rush to turn on one of these solutions. Early on in the April timeframe, Zoom got a lot of bad press for some cybersecurity threats and weaknesses that they had. And we got a lot of calls, should we stop using it? We use Cisco WebEx at Dean Dorton, and our engineers would love me to say, yeah, you don't use Zoom, you use WebEx. But in reality, our cyber team looked at it, and based on the response that Zoom had and the fixes that they put in place, we got comfortable that you didn't necessarily need to stop using Zoom. There are certain industries that you may think twice about it. There are still some concerns about their ownership and being in a foreign location that, if I were in a certain industry, I would really have some concerns. But for your average user, they have responded well. The other popular ones we see are Microsoft Teams and Zoom. With all of these solutions and some of the others, there are lots of updates coming. So one of the things you want to be sure to do is to keep your installed applications on your user devices up to date so that you get those additional security features. Some other best practices: use unique meeting IDs. You don't use those so that you don't have multiple people having access to that same meeting ID and access. Require passwords or PINs to gain access. We saw a lot of Zoom bombing going on because of situations where meetings were open and you didn't really have to have a controlled access. Try using the waiting rooms and admit people that you want. Make sure your users understand how to control the meeting. So the host should really understand how to quickly shut something down if you do have any uninvited attendees. So we hope that we can say post-pandemic, what should we be doing with cybersecurity? I think we can start to do some of these things now as we try to get back to a normal and get business shifting, but hopefully we'll be post-pandemic really soon. So some key considerations that you want to keep in mind are, do you have the right tools in place to protect you? And again, we talked about the advanced antivirus solutions, the next generation antivirus that's helping against the malware. Have you had a cyber assessment done? And so you can have all the controls in place, but if they're not configured appropriately, you can still have vulnerabilities. And so it's important to have a third-party assessment done on a regular basis so that you can understand if you have a vulnerability that needs remediated. The other reason for that is threats change all the time. Does your organization conduct regular user awareness training? As we mentioned earlier, there are a number of or a high amount of incidents and breaches that involve our users being vulnerable to phishing and giving their credentials away. So we want to make sure we educate our users. And then, do we have monitoring tools in place? Would we even know if we had an incident or somebody had compromised our systems? So as you look at your information security program, it's kind of like a three-legged stool. We have people, processes, and technology. So a lot of people think they just throw money at the technology components and fix all their issues. And that's only one of the three components required, because as we've talked about, our people are our biggest vulnerability. And so we want to be sure we empower our people and protect them. And then we got to have good processes in place to review the technology, review the people, and make sure we're assessing our threats and risks appropriately. So from the people standpoint, user awareness is really important. And so we use internally and recommend to clients a solution called Know Before. Because our employees are our biggest vulnerability, we want to try to educate them as much as we can. We want to run simulations to try to identify how effective our training is. And I've seen some clients want to put these programs on hold because of COVID-19. Our employees are, impacted and inconvenienced enough already. Do we want to make them go through this? I would argue that's even more important to do it now. So don't put those programs on hold if you have them in place. If you don't have them in place, you should really look to layer in this as one of your ways to help your people. So from a process and control standpoint, we want to do a risk assessment. And, Jim and Bill talked about this. Our risks change all the time. And when we think about a risk assessment, it's not just a technology exercise. We want to incorporate people from across the organization in that risk assessment. Technology needs to play a part in it, but the business needs to help understand what the risks are and what our tolerances are for controls that we put in place. It must be continual because they change regularly. The information security program should have strong policies and procedures, user education, the tools are part of that, and a roadmap for continual improvement. Our monitoring and response, do we have tools in place to monitor and identify if we have any vulnerabilities, or are we just waiting around for something to pop up? And then business continuity is an important component. We talked about that a little bit. Business continuity can come from a number of different situations. It could come from a cyber incident. How do we keep the business going if we do have an incident, pandemic, natural disasters? So it's important to document and plan, and you want to make sure that you have strong and reliable backup solutions and contingency plans in place, and we want to make sure they're tested. So from an assessment standpoint, one of the things we talked about that limits a small business's cybersecurity improvement is a financial resource reason. And historically, it was fairly costly for a small business to have an external cyber assessment. And most businesses would look at the cost of that in comparison to their other technology spend, and they would say, well, it's not worth it. I'll just go with the risk. I don't want to pay that for an assessment. And so, I don't advertise a whole lot when I do these, but I do want to talk about how proud I am of Dean Dorton's dedicated cybersecurity team, because when we added that service, it was really important for me that we came up with a solution to help a larger cross set of our clients. We weren't really just doing this to focus on our large clients. We wanted a solution to bring to our small and medium-sized clients. And so that team spent a lot of time really playing tug of war on how do we come up with a product to assess the security of a small business cost effectively, but still making sure we're delivering the value and helping them. And so we have a product called the Cybersecurity Scorecard for Small Business. And the other thing that I love about this product is historically a cyber assessment would deliver 100 and some page report that most business people wouldn't be able to even understand or interpret. You had to have an IT degree to understand half of what was in it. And so when they came out with a solution, the deliverable to the client is such that it's easy to understand, gives you actionable opportunity to make improvements to your cybersecurity posture. And so if you don't have any outside resources looking at your cybersecurity position, this is a viable option for even a small business. So we look a little bit about security life cycles, and we've got models for small businesses and we've got models for medium and large businesses. And in here, most small businesses have not even really done much of an assessment. So we start with that scorecard assessment. We onboard and get some things in place to help you build your information security program. and then it can roll into a continual process. With our medium and larger businesses, they typically have something in place. So we'll start with a process to understand the maturity of it, identify a roadmap that we're going to work on collectively to move toward improvement. And then we move into the life cycle where we're doing continual assessments and improvements and training and reaction to anything that may come up. And then a key report or a key component is reporting to management on how we're doing on this. From the technology perspective, some of the key components, these are not all inclusive, but some of the key ones that we want to focus on. Do you have multi-factor authentication solutions in place? Meaning, is there a secondary form of entry into a software or your network? So you start with the first line of defense as a user ID and password. We've talked about how vulnerable those can be. So we want multi-factor authentication in place to be able to have a secondary way to prove that it really is the user you want getting into the system. We've talked a little bit about next generation antivirus. So we want to have a solution in place like a CrowdStrike or a Carbon Black, Cisco ANT for endpoints, SentinelOne, that take beyond just your basic antivirus to protect against those malware and advanced threats that come around. Then we have advanced web filtering. So, a lot of vulnerabilities will come in as users are going to legitimate websites. And so having an advanced web filter helps us to minimize the risky sites that somebody could end up on. And then advanced email protection in place for continuing to filter for those phishing emails and the schemes that our users could fall victim to. Some other key considerations that you want to keep in mind as you're looking at cybersecurity and improving. A number of organizations are shifting to Office 365 with Microsoft, so moving their email from on-premise Exchange servers to Office 365. I think a lot of people just assume that Microsoft is going to protect them, and they do offer options for that, but by default, they do not force them. And oftentimes it depends on which level of service that you're acquiring. So a lot of people will say, I'm going to go with the cheaper one. Well, it's missing a number of the key controls. So we spend a lot of time investigating issues with compromised Microsoft Office 365. So you want to be sure that you've got the right controls in place to protect that information. Your remote workforce. So as we go forward, if you've been an organization that historically purchases desktop computers for your employees, does it make sense to shift to laptops for the majority of the workforce so that if we ever do have a situation where we need to mobilize quickly and work from remote locations, they take their laptop with them and go, and they're more used to that technology? Do we want to look at virtual desktop solutions, ways for facilitating remote access to key information? Do we want to look at more cloud solutions? We've seen a real uptick in the number of people who are looking for cloud-based accounting solutions versus having to come to the office to, access their accounting system. We talked about passwords. Deploy a password filter. Require strong passwords, minimum length of 12, but give, as a trade-off, don't require users to change them as frequently. So they're usually more okay with a stronger, more complex password if you're not making them change them every 90 days. You will want to be sure that any regulatory compliance that you must adhere to will accept that. There's still a few that are struggling to update fast enough with the new industry standards with this. And then as we talked about earlier, backups are critically important. You should have multiple layers of backups. A lot of threats that we saw in the past couple of years impacted people's backups as well. So your data gets encrypted and they've got a path to encrypt your backups. So you want to be sure that you have multiple backups, multiple layers. A key concept is called air gap. So can you get it offline. So, it was very cumbersome and challenging back in the day. We had backup to tape, but that tape was pulled out and moved somewhere. And so if you were compromised, there's no way that backup could be compromised. But now that we've moved away from that technology, we've got more access for the cyber criminal to get to the backups that we have. So going back to that concept of having a gap from regular full-time access is important. And then you want to be sure to test it regularly. There's nothing worse than believing you've invested in all this backup equipment and technology and strategy to then go back to it and realize you can't restore from it. That's a really bad day. So what are we seeing most frequently, most recently with regard to cyber? So I mentioned this earlier, Microsoft Office 365 compromise is one that we do most often. Actually, we delivered 2 proposals yesterday to organizations to help them respond to incidents that they've had with their Microsoft Office 365. So our incident response team is currently working with organizations to try to understand what was accessed, make sure that it's been closed off, remediated, secured, but then you go through the long and tedious process of what information was in that email. And so, we try to get people not to email sensitive information, but more and more we still find that a user's inbox or sent messages or deleted messages have a great deal of sensitive information. And so you have to wade through those mailboxes, understand what was in there to understand if you have a notification requirement. A number of the organizations on the call today are related to the not-for-profit industry. So if you are in that and you use a popular not-for-profit software called Blackbaud for your financials or your fundraising, you most likely were notified that they had a breach in their hosting solution. That actually was a breach that happened, I believe, back in February and March. You were probably notified in July. So that was a bit of a shock. We spent a lot of time with clients trying to understand what happened. And this was an interesting one, and it changes by the day. And there's actually a class action lawsuit now coming. And part of that, the issue with that was, Blackbaud had the issue, took them a while to identify that they had it. Once they identified it, they put their action plan in place. And part of what they said in the letters that were sent to their customers was, you don't really need to worry about it though, because we took care of it. And we all stopped and kind of gave a curious look to that. So what happened, their backup solutions were compromised and ransomwared. And so they were encrypted, but this was one of those situations where before it was encrypted, they took a copy of it. So they had probably a couple of months before they were identified as having an issue. And so in that time, the threat actors took a copy of those backups. They ransomwared the solution or encrypted it and asked for the ransom. And part of the reason they take a copy off site first now is historically people would just say, well, I'm going to restore from backup. I'm not going to pay the ransom. So they got smart and said, well, we want you to pay us. And so now they take a copy first. And the threat is, if you don't pay the ransom, then they will publicize the fact that they took your data. And so you got a huge PR nightmare. And or they will auction that data off to the highest bidder on the black market. So Blackbaud indicated to the clients that they paid the ransom, and the threat actor promised that they deleted all copies of the information. And any skeptical individual would pause and say, okay, you're going to take the word of somebody who just extorted you for money and believe that they truly did delete the information. And so a lot of attorneys and regulators and state attorney generals are all asking that question of, no, you really did have a breach. You really do have to notify, because you have no way to guarantee that information isn't going to end up in the wrong hands. So each of our clients now are trying to understand what or who was impacted, and it's different to each client depending on which of their services you're utilizing and how you use them. So you want to take a look at that if you haven't, and spend a little time understanding what your potential impact is. And if you have cyber insurance, you'll want to notify your insurance company because they will cover this in a number of policies. And you also want to watch what happens with the lawsuits as they are coming out. So on the ransomware front, there was a large regional law firm who was impacted by a ransomware attack in the middle of the pandemic. Every system they had, so all their employees are working remote, so already we've disrupted the business from that. Every system they had was encrypted and unavailable. For, I believe it was a 10 to 14 day period, they had access to nothing. Phone system, email, they had no way to communicate with the employees during that process. And then even still 2 months later, a number of their key systems still are not back online. So huge impact to a business, and something you really don't want to deal with ever, but really not in the middle of dealing with the pandemic. And then another interesting situation that we've worked with is a large regional or national bank was targeted. And the threat actors stood up a website that looked exactly like the bank's website. They paid for Google AdWords for the bank's common login address. And their hopes were that the employees of the bank clients would fall for the wrong website. And those that did would be presented a site that looked very familiar to the one they were used to. And they would put in their user ID, they would put in their password, and they would put in their multi-factor authentication token, usually a 6 to 9 character thing that expires after usually 30 to 60 seconds. And they would capture that number, and then they had a computer program in the back that would go log onto the bank's real site with the multi-factor authentication, get in long enough to set up an additional user ID who had the ability to do wire transfers, and then start processing wires from the client's accounts to foreign bank accounts. And that was a very serious incident. It's one of the few areas where I've ever seen multi-factor authentication really have a breakdown. It's logical if you think about it, how that could break down if you're using the kind of token that requires a number to be keyed in and then rotates. So, that's an example of the threat actors continue to evolve. So we get controls in place, and then we have new scenarios. Controls in place, new scenarios all the time. So we want to be sure that we have, good user awareness and education. So in this particular situation, education for don't go to Google and search for your bank. Know what the valid link is. Save it as a favorite. Use that is one there. Some of the new multi-factor authentication solutions that do a push notification, so it pushes directly to a known spot, is another one of those that I think would have helped in this situation versus the traditional or the original method of keying in the code. So that's just a few examples of some interesting cyber situations we worked on recently. So I often get asked, what's the one thing? So, there's all these things you could do, and it can be overwhelming, and you can think, oh my goodness, where do I start? If you don't have multi-factor authentication, and again, ignore the example I just gave of the bank where it broke down, in 99% of the time, multi-factor authentication would limit the ability of any issue with users giving out their user ID and password inappropriately. So that's the starting point. Start there, do that. If you have that, kind of number 2 would be make sure you're having third-party assessments done, because no matter what you have in place, you could still have holes. Something could change tomorrow that you didn't anticipate created a hole. And then the third, if you're using Office 365, be sure you've had the proper setup and security around Office 365. A few resources on our website, the Dean Dorton Insights. We regularly post information out there, both pandemic related, cyber related. We set up a site with some remote work tools if you're still struggling with that. And then we have our cybersecurity resources. Questions?
Yeah, quite a few questions, actually.
Oh, goodness.
So I think they're going to be good ones. The first one is, can we be impacted by Blackbaud's data breach if not hosted by them?
If it was not hosted by Blackbaud, if you have it on site, you were not impacted. And then even if you are hosted, there's still some scenarios where you may not have been impacted. So you have to understand which of their hosting models you're on. They actually have 3 different hosting models. And then from there, what services you actually use of there. So there's a multi-step process there to understand what your impact is. But if you still have it installed locally at your office, that was not impacted.
How do you determine an appropriate limit for cyber insurance? Is there a recommended minimum?
That's a fun one. It's going to vary business by business. It's going to vary based on the type of information you have in process and the number of records that you have in process. And so there are a few different statistics out there that will tell you for if you're in healthcare and you have health records, you should estimate this dollar amount per record. And so you can look in your system and say, we have the records of, 100,000 patients, multiply that out, and that could tell you what your potential compromise is. If you've got credit card information, if you've just got, sensitive employee or personal information on constituents, there's different dollar amounts there. Typically I would say a minimum of $1 million, but it will vary drastically because $1 million would not be enough for a larger organization. And each policy is a little bit different too. The cyber insurance policy is a bit of a young market and they're still trying to figure it out. So it has improved greatly over the past 5 years, but there's still a number of inconsistencies between what the different insurers are providing and how they approach their policies, what they cover, what their requirements are. So you want to make sure you really understand what your goals are and then make sure the policy aligns to that.
And then the last question is, do you have any opinions on G Suite, especially for smaller organizations?
G Suite would be the same as Office 365. It's fine with the proper controls in place. One of the things that we see a lot when people shift from an on-premise solution to a hosted solution, you automatically assume that the liability transfers to the hosting vendor, and that's not necessarily the case. You still have the responsibility for it. You still need to make sure that you're aligning with good vendors. And then, as I mentioned, in the case of Microsoft and Google's solution, there's some low dollar ones. And again, it's the old adage, you get what you pay for. And so if you're trying to get the cheapest one, you're probably going to bring some vulnerabilities with it. You've got to go up in your plan to be able to get access to some of the more secure components. And then even in the plans that have some of those, they don't all turn on by default. So you've got to actually put some things in place for that. And so with G Suite, again, you would want to make sure you got a multi-factor authentication component layered in there so that passwords aren't compromised.